Welcome back everybody to another episode. In this one we're going to be talking about Fibonacci numbers, okay, and the Fibonacci tool that we can use to give us potential trade ideas, okay, and a additional confluence, okay, that we can actually use when framing up our trades. So what actually are Fibonacci numbers? Well, Fibonacci numbers, okay, are basically numbers that are in a certain sequence where each number is the sum of the two preceding numbers. For example, okay, on the screen you can see that I've got a number of different Fibonacci numbers, okay, 55, 89, 144, 233, 377 and 610. Now all of these numbers, okay, are Fibonacci numbers. This means that every number, okay, is the sum of the two preceding numbers. So for example, 144, okay, is the sum of 55 plus 89. Now 233 is the total sum of 89 plus 144. Now 377 is the sum of 144 plus 233, okay, and so on and so on. So it's constantly the sum of the two previous numbers. Now these are called Fibonacci numbers and they're found all throughout nature, okay. You can see Fibonacci numbers in anywhere from snail shells to flowers to even galaxies, okay. They all are shown, okay, in the style of the Fibonacci numbers. So the Fibonacci numbers are clearly very important in nature, okay, and the reason why that we like to use them in trading, okay, is because what we like to do is work out the specific ratios between these Fibonacci numbers, and then by applying these ratios onto the chart, what we can actually see, okay, is the relationship between certain legs of price action, okay, and the way in which price retraces to certain levels. So we're going to be getting into, okay, these different levels and the reasons why the price actually likes to pull back to these certain areas, okay. But first of all, what we're going to do is just explain how we actually come up with these ratios. So first of all, okay, on the chart you can see that I've got the area marked in here, okay, of 0.66 to 0.618. Now 0.618, okay, is the most key level that we're going to be focusing on. Now why is 0.618 so important? Well, for every number in the sequence, okay, if you take the lower number and divide it by the number above it in the sequence, you'll always see a value of around 0.618. So 0.618 is seen as a clear level, okay, of interest because of the way in which the ratio works between the numbers. So for example, okay, if you were to take 55 and you were to divide it by 89, okay, what you would get is a result of 0.618. Now again, okay, if you were to take 89 and you divide it by 144, again you will get a value of 0.618. And so on, okay, 144 divided by the 233, you will get 0.618, okay, and again, forever, okay, for as many Fibonacci numbers there is the ratio of 0.618. So this is a very key level for us, okay, because it's clearly, okay, showing a pattern in the sequence, okay, and when we actually look at the charts, what you'll see is that this level is also an area of interest, okay, and lots of people who trade Fibonacci, okay, will be looking for potential reversals at this level, okay, which is 0.618. Now this level, okay, from 0.618 to about 0.66 can also be referred to as the golden pocket, okay, and it's just showing that key relationship between, okay, each two numbers in the sequence, and it's showing, okay, that this is a very sort of important level in price, okay, because of the way in which every number which you divide into it will always give back a value of 0.618, okay, sometimes you'll get 0.6, okay, and also you can also get up to 0.66, so that is why we call this the golden pocket, okay, also the golden ratio. So you may be wondering, okay, well, what about the other numbers on the chart, okay? Well, the main two other numbers that we're going to be focusing on are both 0.236 and 0.382. Now, what is the ratios of these numbers all about? Well, for 0.382, instead of looking at the relationship between, say, 55 and 89, what we're looking at now, okay, is the relationship between 55 and 144. So we're looking at the relationship between 55, okay, and now two numbers further down in the sequence. So again, 55 and 144, 89 and 233, 144 and 377, 233 and 610. Okay, and now if you look at the relationship between these two numbers, this time if you divide, for example, 55 by 144, what you will get is a value of 0.382. So this is another important ratio level because it's now showing the relationship between not only the two numbers next to each other in the sequence, okay, but now the number 55, okay, and then the number 2 down in the line on the sequence. And again, that will always happen. So however many times you want to do it, okay, it will always show that same relationship, and it will always give you a value, okay, of around 0.382. So this is why this number is also very, very crucial to us, and we like to plot this onto the chart as well, okay, and look for potential price reactions at around this level. So the final one, okay, is 0.236. So 0.236, okay, again, is an important level, and it shows another ratio between the numbers. So this time what we're going to be looking at is the relationship between 55, okay, and 233. So this time we're looking at the relationship between 55 and the third number in the sequence, okay? So we're looking at 89 and 377, okay? So we're always looking at now the third number down, okay, 144, and of course we're looking at 610. And again, if you take 55 and you divide it by 233, you will get a value of around 0.236. And again, if you take 89, okay, and you divide that by 377, you will get 0.236. Okay, and this is constantly happening, and this is why these numbers are so important. So of course you may be wondering, well, why are these levels important when it comes to actually predicting price action on the charts? Well, because of the amount of people that use Fibonacci, okay, and the fact that a lot of traders will be looking at these potential levels, okay, because they are seen everywhere in nature, okay, and they're also representative onto the charts, okay, because, like, you know, the markets are kind of, you know, showing natural aspects to it, okay, the market moves in cycles, okay, similar to nature. And it's, you know, there's lots of elements to the market, okay, which can be also related to the way that nature works. So the fact that, you know, in legs of price, what you can see is that price retraces to these potential ratio levels, okay, is no surprise. And the fact that the amount of people that are looking for reactions at these levels can also cause, okay, retracements from these areas. So this is the way in which, okay, Fibonacci numbers work, and the way in which that we have identified these potential ratios, okay, from the golden pocket down to 0.382 and 0.236. Now, of course, I've also got 0.5 on the chart. Now, this is also just a great level in general for potential retracements, okay? The 50% level of any potential impulsive leg is always a great place to look for price to pull back to in the corrective phase. Okay, so we're also going to be looking on the charts at the ways in which price pulls back not only to, you know, these certain levels, but also the 50%, okay? And we're going to be checking all of that out. So of course, you know, the Fibonacci numbers are great, okay, and they can be a great tool to use when trying to frame up a trade idea, but of course, you know, they aren't everything, and it's important to remember that we need to have additional reasons for looking for potential trades, okay, either as a continuation or, you know, as a potential, you know, reversal, whatever it may be, okay. We need to make sure we've got additional confluences as well as potentially the Fibonacci tool, okay, when framing up that trade idea. You don't want to be someone who's using the Fibonacci and trading it on its own, because it won't be that reliable, okay, over a larger sample size just on its own, but as an additional confluence, it then becomes a great tool for us to be able to use, okay, especially in areas such as, breaks and retests. A lot of the time you'll find that, the level at which price pulls back to, okay, and the area at which we get the break and retest will align with one of these numbers, okay, on the Fibonacci tool. So what we're going to do now is we're going to have a little look on the charts at the ways in which the Fibonacci tool can be used, okay, and the types of, reactions that we see at these levels, and how we can actually tie it into trading, break and retest, okay, and generally impulses and corrections, and trying to call those kind of turning points by using the Fibonacci numbers. So let's get straight on into that now. Okay, so the first example I've got here on the charts, okay, we're going to be looking at this breakout on price just in here. Now, of course, as you can see, price has become impulsive, okay, we've got this nice larger impulsive leg of price just in here, and we can expect the price at some point is going to start to pull back, okay, create some kind of correction, and then that we may see, a continuation of momentum to the upside. Now, of course, if we were looking at break and retest, we have this area of interest just in here, okay, which can be seen as initially an area of resistance, and the fact that we've now broken through that, okay, it can be seen as an area of support. So, of course, now if we were going to say to ourselves, well, we want to get involved in a trade, okay, potentially at this area of break and retest, how else can we add confluence to this position to give us, a better indication that price may be ready to continue moving to the upside? Well, of course, if we were to take our Fibonacci tool, okay, and let's say that we put it on this entire move to the upside, what you'll see, okay, is that we get a number of different price values. Well, the price value of most interest, okay, wouldn't be the 0.236 and it wouldn't be the 0.382, both because, okay, they're not in a value area of interest. Of course, we then have the 0.5, okay, which is also aligning with this area of break and retest. So at the moment, this would be seen as the best area, okay, to get involved in a trade. And we can now see that we've got an additional level of confluence, because if price is going to return into this area, okay, we can now say that we've got both the break and retest, okay, the resistance turned into support, and we've now also got the 0.5, okay, line being hit, which means we may get an additional reaction to this area. So that is how I would go about using it as a form of confluence, okay, and of course you want to obviously add in additional things, okay, potential candlestick patterns, etc. The more confluence you have, the better your trade ideas are going to be, okay, just in general, okay. You don't want to be getting in with just one level of confluence. You want to have multiple things going in your favor before you really want to take a trade in a particular direction. So now we've got the Fibonacci tool on, okay, let's start to play price out now and see the types of reactions that we get to each of these levels. So of course, price could continue moving higher, in which case we will keep expanding that Fibonacci up, okay, but right now let's just see what happens next. So price starts to consolidate around, okay, it starts to move up again, and then we start to see a drop down, okay. First of all, okay, we've gone straight through the 0.236 level in here. It tried to initially react off of it in this candle just in here, but then we've closed through that area, which is pretty much what we expected. So then, okay, again, now we've pushed down, and then we've also broken through the 0.382 line. So now we've come into the area of potential resistance turn support, but are we going to get involved in here, or are we going to wait for our 0.5 line? Well, of course, price could go from just this area here, and we may see a reaction straight away to the upside. However, as an additional confluence, what you could do is wait and say, well, the 0.5 line is also within our zone. So if price, could use this 0.5 line, then why don't we wait for that and see if we get a potential reaction? So if we keep playing price out, you then see initially, okay, we start to move to the upside. So you may be thinking at this point, well, maybe we've missed the trade now, okay. However, if you just keep playing price out, you then see the next candle strongly retraces back down. Okay, we come up again, we push back down, and there we go, okay, we've now actually touched the 0.5 line. So at this point, okay, I would be looking on potentially a lower time frame to try and get involved in a long trade, because now, okay, we've got an additional level of confluence in the zone that I'm trying to trade out of. So of course price may wick lower, okay, it might even close below it, and if it does, then I can't really use this as a really good area of confluence anymore, and I might have to wait for, say, the golden pocket. However, let's just see the type of candles that we get from here. So straight away we get a small up candle, we get some consolidating candles in here, okay, and then we start to see a move back to the upside, okay. From there we then consolidate round again, more impulsive candles, okay, and we start to push to the upside. So as you can see, okay, you can see how we've had the impulsive move, the pullback into the area of break and retest, and also, okay, mitigating into that level of 0.5. So that was a great trade where we can see that the 0.5 came in as a really great tool and as an additional confluence to build strength in our trade idea that price will be moving to the upside. So let's have a look at another example now, okay, where we see a slightly different situation and more reactions to these lines. Okay, so now let's have a look at a slightly different example. So in this situation, what we would see is that price again has impulsed to the upside. Now, because of that, you could say that this high in here has been broken, okay, and this kind of last candle in here could now be seen as a potential area for price to return into, okay, and then maybe see some kind of reaction out of. Now again, okay, price could continue to push higher, okay, and what we want to be able to do is obviously use the Fibonacci tool to give us again an additional confluence to trade something out of this area in here. So what we're going to do is we're going to grab the Fibonacci, we're going to put it on, okay, from the low to the high, okay, and we're going to see what kind of levels we actually have within our area. So right now we're looking at the 0.236 and the 0.382 lines. So let's play price out and see what kind of reactions we get. So, okay, so first of all we get this down candle. So again, what we can do is we can bring the high up, okay, just a little bit higher now because we've pushed a little bit higher. Okay, now we push down. So straight away, okay, first of all, we're seeing a reaction to the 0.236 line. Okay, so this could be a great indication that price may be moving to the upside if we had potentially some kind of lower time frame confirmation. Now, if we keep playing price out, okay, there we go. We've now broken, okay, the 0.236 line. So now, even if you did get confirmation, you might have taken a trade, and that would be a good area to get out, okay. Or you can just kind of, wait and see what happens next if there wasn't any entries. Now we're going to be focusing mainly on this 0.382 line. So anything that we get in this kind of area now is going to be the area of interest, because then we're going to have those stack confluences of the break and retest zone and also a Fibonacci level. So let's keep playing the candles out. Okay, we get a little move up. Great. We don't break the high yet. We start to come back down. Okay, now look what we've done. So now we've actually tapped into the 0.382 and we're seeing this nice low test candle. So already, okay, we're seeing a nice rejection candle. Like I said, you could just trade this kind of candle on its own because it is obviously a reversal candle, okay, to potentially see buys. And we're also seeing it at a level in a zone. So there's lots of confluences here, okay? So for example, what you could do is literally just buy one like that, okay? Protect yourself from there, and then try and trade this to the upside, okay? So that could be one trade idea that you actually look to do, okay? So let's actually see what actually happens. So price starts to kind of move around. Okay, there we go. We get another low test candle. So we're starting to see wick rejections now. Okay, we're wicking away from this line, which is what we like to see. Okay, another reaction candle in here. So now we've had 3 low test candles. So this is looking very nice now. Okay, another wick away. Okay, another kind of wick away. We're playing around with this line right now. Okay, this is the last line within the zone. So we just want to see if these wicks continue and if we get any kind of momentum up. There we go. A little bit of momentum coming into the market now. These kind of reactions, okay, is what we want to kind of look for. Lots of wicks, low momentum candles. It's all signs of price running out of steam in one direction and that we may be continuing in the other. Okay, as well as that, what have we got? If we look at impulse, correction, impulse, we're also seeing, okay, a continuation candlestick pattern. So what we're seeing is a potential descending channel. Okay, so we're seeing a descending channel occurring, okay, after an impulse to the upside. So this is showing us, okay, clear signs of a 1, 2, 3 touch pattern at a Fibonacci level within a zone, okay, in the correct phase. So this is giving us all indications now that price is probably going to be moving to the upside. So as you can then see, if we play price out, and there we go, okay, so we actually loop back round, so we actually create another candlestick formation in the form of a double bottom. So in this situation, okay, we've got every single reason to buy this in here, okay, so if you didn't, you'd just be hesitating because there couldn't be any more confluence right now that price is going to be moving to the upside. So of course this would be a great place to take a chance on a potential move to the upside, okay, and there we go, price completely takes off, and there we see price has gone to the upside. So that's a really clear example there, okay, of looking at the impulse, correction, impulse, okay, and using the Fibonacci as a confluence to get involved in potential long position. So let's have a look now, okay, at another example, okay, where we can see a different Fibonacci level get here.
The best time to take action is now. What are you waiting for? Tired of struggling with market direction? Want buy and sell indications at a click of a button? Who wouldn't? Check out TradeDork's buy and sell indicator today at TradeDork.com.
Okay, so this time we're going to be looking at a bearish example. So as you can see, okay, we're in a nice bearish move to the downside in here, okay, a clear impulsive leg. Now, where did this impulsive leg kind of come from? Okay, well, it was from this breakout in here, which means that potentially we're going to see price return to maybe these kind of levels in here, okay, so this would be a area of support which becomes our resistance, okay, and then we may see a break and retest and a move lower. So again, what we're going to do is we're going to put on the Fibonacci tool and see if we have any levels of interest which tie up with our potential break and retest zone. So if we put on the Fibonacci tool now, okay, what we can see is, if we just pop this on from here to here, okay, what we've got is a couple of options. Okay, so what we can see is that price could, okay, potentially come into either now the 0.5, okay, which is in this level in here. So we may see some kind of wick reaction into this area, or we may see, okay, price come up and tap into our golden pocket. So there's a couple of options now, okay, that we're going to be looking for. And it's just a matter of, how you want to actually get involved in these trades and, the types of confirmation that you want to be able to see before you take an entry. So price comes up, okay, we want to wait for our break and retest zone. First of all, okay, we get this nice kind of upwards candle in here, okay, and of course it closes straight through our 0.5 line. So at this point in time, the only option we have, okay, would be to trade this golden pocket. Now, one way you can trade the golden pocket, okay, would be to literally put your stop on there, okay, and make your stop size, okay, the size of, okay, that golden pocket for about, say, okay, a 9 pip stop. And then, of course, you'd be targeting the low for a 1 to 12, okay, so that would be for a 12% trade. So this would be quite a strict trading zone, okay, but of course, the golden pocket is the key kind of level that we're looking for. So if it is tying up with these kind of levels, okay, obviously you could take a chance that price is going to react into here, and then we may see a reaction. Of course, if price does wick through it, okay, and as long as it doesn't close through it, don't be disheartened if you then take a loss in this kind of situation. Of course, if you then look for a lower time frame candlestick confirmation, you then may be able to get a potential re-entry. So let's actually see what happens next. Okay, and there we go. That's a clear example, okay, of how price can wick through the golden pocket. So here, okay, if you took a chance on just the golden pocket holding, you would have lost, because you can see this nice high wick in here has broke above the 0.66 line. So this is the importance, okay, of trading with a confirmation, okay, and it's really good to be able to have most of the time, okay, some kind of candlestick pattern presented to you either on the time frame we're looking at now or on a potential lower time frame to really confirm that idea that price may be ready to move to the downside. So after we're now in the golden pocket, okay, are we going to see a reaction? Okay, and there we go, okay, a beautiful down candle. So again, you may be looking now at lower time frame breaks of structure, okay, and some kind of lower time frame break and retest. Whatever it is, okay, you can see we've had that reaction now. So we are expecting price to continue moving to the downside. And there we go, okay? Price starts to move lower. So of course, okay, once price then breaks the low, it's completely allowed to then completely retrace and break up to the high. I mean, at any point it could obviously move back up. It doesn't have to break this low, but our trade idea was that price was going to hit this and then trade down to at least the low. So once that target was met, okay, we don't know what could happen next, and of course price could then obviously reverse. But the key point is, okay, is that we're seeing the reaction to this break and retest zone, and the fact that it's also coming out of the golden pocket, okay, it's a great tool to be able to use when framing up trade ideas. Now let's have a look at another example. Okay, so in this final example, let's follow the rules again, identify what trend we're in, okay, and then try and frame up some kind of break and retest level, and then obviously use the Fibonacci. So if we were looking at this, what would we be looking at? Well, I would be saying that price was kind of pushing up, okay, small little pullback in there, and then a kind of a push up. Now this was kind of the last major low in here, and now we're seeing a break, okay, of this major low level. Now, of course, if we're seeing a break of the major low, it means that this area, which was previously support, may become some kind of resistance. Okay, so we're going to put this area in for now, and we're going to just keep an eye on it in case, you know, price likes to come back up and then mitigate into here and then potentially trade lower. So now what we're going to do is we're going to identify that, okay, well, this is our downwards leg. So what we're going to do is we're going to pop on the Fibonacci tool, okay, and it's going to give us our trading levels. So this time, again, one of the Fibonacci numbers does tie up with our zone, and this time it's the lowest one, so it's the 0.236. So what we're going to do is we're going to play price out now, and we're just going to see if there's any reactions to this zone, okay, and look for potential trade ideas. So, okay, price starts to react, and we do come up into this area. Great. Okay, pulls back down. Messes around a little bit. Okay, so of course you might be looking in this area thinking, okay, well, am I going to sell this now? It looks like it's starting to slow down, and we're seeing, you know, elements of a potential ascending channel. However, if you just wait for the Fibonacci level, okay, it may give you a better entry line, okay, and it will obviously give you then a stacked confluence that price may be actually going to go down from that area because it's obviously in a much better location. So the next thing we see are a few more down candles. Okay, and then we get this kind of spike up candle, but then it leaves a high test. So at this point in time, okay, I like the look of this candle. Of course, yes, it is coming just out the top of the zone, but that's absolutely fine because it's showing us a potential reversal candle. Now, as well as that, we haven't actually closed above the 0.236 line, which means that we've now got a high test candle and the Fibonacci and the break and retest and the impulse correction, okay, and we've also got the ascending channel now, okay, that we're seeing. So now we've kind of got all elements again of a potential continuation to the downside. So of course, a high test candle, a great place to look to get involved in a trade. So you could either just sell one in here or wait for, again, a lower time frame confirmation before we then may see a potential move to the downside. So if we then play the next candle out, okay, it moves up the side. Okay, we then get some more, there we go, more high test candles, so 3 of them in a row, and then a beautiful impulse to the downside. So there you have it, okay, that is an example of the 0.236 line playing out. Of course, you can see that price does continue to move in the downwards direction, and again, by being patient and waiting for all of the confluence together, what you'll then see, okay, is that price pretty much gives you all of the different confluences, okay, from the break and retest, from the continuation, okay, candlestick structure, from the Fibonacci, from the reversal candlestick patterns, okay, 3-touch channel, impulse correction, impulse. It's got everything that you need to look to get involved in a potential trade to the downside, okay? And of course, if you can then get involved in one of these kind of, you know, high test candles in here, okay, then we're looking at, okay, at the best 5.64%. Okay, so that was what was on the table, and it was a great opportunity with all the confluence that we were looking for. So I hope you guys can now see, okay, the power of the Fibonacci's and the way in which you need to use them with additional confluence just to help you frame up a potential trade idea. Don't try and trade these on your own. What I would do is I would definitely pair it up with the elements of support and resistance, okay, break and retest, and our reversal support and resistance areas, okay, try and tie in some kind of trade idea, always looking for those, you know, retracement levels with the Fibonacci, okay, to really give you a strong indication that price is ready to go in the direction that you're anticipating. And then, okay, it's going to give you the best shot at actually being involved in a profitable trade. So make sure you guys go ahead and check these out for yourself, okay? Go onto the charts and play around with the Fibonacci levels, okay, and see for yourself the type of reactions that you can get when looking, okay, at trending markets and impulses and corrections, okay? And I will see you guys all in the next episode, so stay tuned, okay, and I will catch you guys there.
Be a dork.